Hello and a warm welcome to all of you profiteers, and here's wishing you a Merry Christmas and a very Happy New Year 2021. Well, the countdown to the new year has just begun, and me and all of us come together in wishing all of you that you create more and more wealth, just like the top 10 most consistent all round wealth creators that you can see on your screen. So, this video is all about a quick roundup on the most consistent wealth creators all round across all sectors for the last 25 years. This study, as you might be aware, is carried out by Motilal Oswal Financial Services and this gentleman Ramdev Agarwal, who kind of is very quick, and his team is very quick in these analysis. So all credit to the content of this video slides goes to Motilal Oswal Financial Services. Now there are a lot of there are a lot of perspectives through which you can read these studies. Uh, One of the important perspective is, what do you look for when you look in numbers? So first thing that strikes me, which he himself mentioned, look at the top wealth creator is Kotak Mahindra. HDFC Bank misses out here because this study is calculated from 1995 beyond till 2020, so the last 25 years. And HDFC Bank got listed, he said in this study video that HDFC Bank got listed 6 to 8 months after from their starting point of this study. So obviously it's not a part of this list. Next year you will find that company. However, Kotak Mahindra is a consistent compounder. You can see Asian Paints at number 3. You can see Pidilite has been at number 2, which is most consistent, and that's why it features in all of our portfolios. Shree Cement is number 4, so that's another typical sector. Then HDFC Parent finds its way at number 7, which is encouraging. And likewise, the H2B2 that we keep talking about, HDFC Twins, it's now H3 with HDFC Life Insurance, and Bajaj Finance you can find at number 8. So H2B2 is HDFC Twins and the BAF Twins, Bajaj Finserv and Bajaj Finance. Dabur is at number 9. Number 10 is Eicher Motors. So a mix of all sectors. This is fine. This is all round wealth creation. Point to be noted here, can you spot any public sector company here? Any PSU? A lot of us keep asking each other that PSU stocks are undervalued, undervaluation hai. Well, I don't seem to find any PSU, not here, not in the top 20 wealth creators. None of them. In fact, there's been wealth erosion in the PSU space, right? A lot of it. So, I mean, if you're asking me why is SBI not there, you have to think yourself. We never recommend that stock because the thing is, if you look at all the criteria and all the stock market experts talking about it, why do you see that only the private sector banks make it to the top? Why not an SBI? What is it that is lacking there? I think the answer is quality of management and management integrity. When you're a public sector unit, you have so many other heads to look up to that the core objective becomes running the company rather than growing the company. And that's a very, very clear perspective change in quality of management and management integrity. Now moving on, if you look at the big ones who missed it, can you see all the public sector units here? Not all, but quite a lot of them are here. It starts with SAIL, BHEL, GAIL, MAIL and TAIL and all of that. To be honest, you find SAIL, you find MTNL, Tata Steel, HPCL. Okay, it's a mixture of public and private, but why do you think the top 3, 4, 5 here who missed out are public sector units? Something to ponder about, right? It's exactly something which we've been talking about as our investment philosophy, to stay away as far as possible from PSUs and sunset sectors. See, we need to figure out going further which is the sunrise sector and which are the sunset sectors where there's a lot of capital required to generate more capital. I think we need to focus on companies which have a lot more of free cash flow, where they don't need further capital infusion in the business to generate more ROE and ROCE. That is why ROCE and ROE become so important when we talk about these studies. You can watch this study from the way you like, but what you take away from the study can be different for different people. You can find Grasim here. You can find Castrol India, some name like Castrol, which is potentially the biggest name in its space. Still, it's missed it. I mean, Castrol's CAGR, profit after tax compounded annual growth, is just 10% for 25 years, which is not very low, but it's below par. So here is where the management objective comes into picture. What is the management trying to do with the company? See, in investing, we say you're betting on the car, or you're betting on the car and the driver, but your money should be on the driver. And likewise, for a horse race, you bet on the jockey equally, right? Because an average car can perform well if the driver is good, an average horse can perform optimum if the jockey is good. So similarly, in companies, an average company can outperform if the management is integral to the business. That's exactly what I'm trying to bring out here. There's ACC, the darling of the 90s, has not compounded beyond. I mean, it's abysmal. When you look at ACC, 6% of profit growth for 25, it is abysmally low. It's a sunset sector. It's a sector. I know cement is something which is cyclical. Now people are talking about it. But guys, trust me, look at the real estate demand in this country for the last decade. It has been so subdued. And all these sectors of automobile, real estate, pharma included, they are cyclical. When their cycle comes, they run like hell. And when their cycle falls, investors run like hell away from them. So that is one primary reason you need to focus, which are the ones who missed out. Now look at this slide. This is the final slide of this video, which I found. I must share it with you. 25 most profitable companies you'll see most of the companies are consumer facing. So even beyond the pandemic, moving into the new year and the next 3 years, we might look at a good rise in consumer facing companies, especially in the technology space, in the banking space, in the NBFC space, in the consumption pattern. So any company which is not B2B, maybe somewhere, if the consumer is a B2C guy, not a company per se, that is where we need to focus. Look at HUL. I mean, HUL, Nestle, Colgate, Palmolive, most profitable. So in terms of ROE, ROCE, they are very high. But this is not the only criteria. You need to figure out ROE, ROCE high fitting into a sunrise sector. Is the company in a sunrise mode or a sunset mode? And Castrol figures here. Ironically, Castrol India figures here also. That's why, I'm not too bullish on these companies, because in spite of the fact that they generate so much of ROE, average ROE for Castrol being 56%, the profit after tax is so low. So somewhere the business is a cost kind of eating, it eats into the profit. It's a profit eating business. Maybe that's what we come to know by these kind of cross analysis. Asian Paints is the most consistent that you'll find in all ratings. It's exactly like a consistent batsman who just doesn't give up and doesn't get out. He stays not out at the end. Infosys, Abbott, ITC is one which we are very bullish on, because ITC is just unlocking its FMCG business and their products are just getting too good. I mean, their products are giving the likes of HUL and other FMCG majors a run for their money. Guys, can I be honest with you? Something which HUL took 80 years, Britannia took, some 50-60 years to establish in India. That kind of network in the rural belt, ITC has done it in the last 15 years. I think when we look at this study in 2030, you will see ITC being a part of the top 10. Definitely, if you start making small positions now. Because 2005 to 2030, in those 25 years, ITC's true value will be unlocked. I think it is still getting unlocked in the FMCG space. So far, whatever it has come is in the tobacco space. And I mean, the list is endless. But I think from this 25, you can pick up a lot. You might be able to pick up a lot of consistent batsmen. And your portfolio should have 3 outperformers. Now, that is where the hunt comes in our group also, in our YouTube channel, The Profit Curve. We are hunting for the next 3 big companies, and very soon I'll be giving you a video pointing out which one of them in 2021 should you make a position slowly, so that in the next decade it can outperform. There are a lot of them which can outperform, right? Anyway, we just thought that we'll put out this study to you, our perspective on the study in a very lucid manner. So I hope you enjoyed this. Keep a track of all this, and please remember, जैसे हर एक friend ज़रूरी होता है, but all your friends are not your best friends. Similarly, all your stocks are not going to perform. And similarly, all companies that give out good ROCE and ROE, as you can see from this slide, not necessarily end up making good profits. So there's a difference between the two. You need to analyze more concepts. The most important thing is, what is the interest of the management? Is the management looking to diversify unnecessarily, or are they looking at generating more and more and more of free cash flow? So that is what we need to understand. What's the cost of capital of the company? And that is where, once you get the ROE, the ROC, and the cost of capital, we can figure out how much is the annual free cash flow. So we'll look at all these insights very soon. I wish you all a blessed week. It's a time to rejoice, look back, make your decisions, and do let us know if you would like to join us in our training program and life membership. Adios and keep profiting, guys.